Good morning, everybody. It's Friday. Welcome to the Donald Trump endorsed flow show, Forex Analytics. I can say that with relative impunity because the men in black coats won't come knocking at my door. They'll go knocking at Blake's door. Anyway, nice of Mr. Trump to drop that truth bomb last few hours ago. Look at that, Forex Analytics, and even my ugly mug on the screen as well. Unbelievable. Right, let's get into stuff. But just before we do, just want to remind you, this is the last weekend of our sale, 40% off sale. That is going to disappear this weekend. So if you've been umming and ahhing, you need to jump on board now, or you're going to lose out on that sale. And being in our chat room has been invaluable. Most certainly to me as a trader, but I know it's been invaluable to everyone else who's been in the room over these busy last 2 weeks and everything that's happened. So if you're undecided, now's the time to do it. Pull the trigger, get in there. Morning, Kay. How are you doing, mate?
Ryan, TGIF, good morning, everybody. The rumor goes that Trump is going to buy a lot of Forex Analytics coins. Just be prepared for that one.
What are we going to call them? Fart coins?
Nah, that's already existing, right?
Oh, yeah. We'll have to think something else then. Face coins, maybe.
Hairy coins.
Yeah, hair coins. There we go. Guaranteed to be a winner. Put your house on it. Right, not investment advice, obviously. Okay, right, let's get stuck into stuff because plenty to be talking around. Firstly, we've had Takaichi. She's unveiled her pledges for the leadership role. She wants to lower the ratio of government debt to GDP, blah, blah, blah. She's also proposing an income tax cut and cash payout to households. I mean, it's getting one step from bribery, Kay. All these cash handouts this lot want to offer up.
Nice, huh? Nice.
Yeah, do you still qualify? Have you still got a postal address over there?
Yeah. Actually, my son is going to get money from the Japanese state. He's still over there.
Happy days.
Yeah, she's basically, but she didn't go for global tax cuts because she said it would take too long or whatever to put it together. I guess she means before the election really happens. But yeah, basically. Really, the too long didn't read version is that she wants to really pump up growth, and we'll see about fiscal stability later.
Yeah, very much. Right, there was a bit of data out as well. Let's get rid of that. We had CPI data, national CPI data coming out ahead of the Bank of Japan, and pretty much as expected. Headline CPI, depending on where you looked, fell to 2.7% from 2.8 expected and prior 3.1. One of the core measures came in at 2.7 as expected, again confirming a drop from 3.1. One of the other core measures dropped to 3.3 as expected from 3.4, so less of a drop there in that core measure. But according to UEDA later on, these inflation numbers are all as part of their outlook and how they see things going. Right, so the BOJ, they kept rates unchanged as was expected, but we had a bit of news. There were two dissenters, topic of the week. So it was a 7-2 vote to keep rates unchanged. Both Takata and Tamura wanted to hike rates 25 pips. Takata said that price stability target is more or less achieved and a shift away from the deflationary norm. Tamura said that price risks due to the upside, the policy rate should move closer to neutral, but they all got outvoted by the rest. Some other news as well. The Bank of Japan are starting QT on their ETFs and J-Wright holdings. They see a moderate recovery, but growth and inflation are going to slow before re-accelerating. That was the rest of the statement. UEDA, this is going to blow some of our US traders' minds. UEDA said it would take more than 100 years to dispose of their ETF and right holdings at the pace decided today. So they are not in a rush to do this. I mean, okay, even 100 years was is a long timeline for even for
Yeah,
them.
even for the Japanese and the Greeks, that's a long time. That's a long time. I don't know how Ueda will look in 100 years' time when he sells his last ETF, but he's not going to look pretty. He is not already not looking very pretty. But yes, excuse me. So yes, those 2D centers, that's new, although Takamura already one of the prior meetings was expressing um, the possibility of a hike, but he never voted against the consensus so far. So, but two dissenters is new. That also shows us, what I've been and chatting about that in the room as well, in the middle of the night because I did unfortunately get up for the Bank of Japan. It is also the case that. If there wouldn't have been, and we've been talking about it on the flow shows as well, if there wouldn't have been those LDP elections ongoing, I think really the chances for a hike were a lot higher than what the market actually was expecting. Because if we look at not the first one taking them out of negative territory, but the other two rate hikes and the first one was a bit of a surprise, but the other two rate hikes, they came on the back of a month of positive real wages, and we did have such a month last month. So there could have been really the surprise for them to hike this month, but it is kind of Ueda went to all kinds of lengths to try to explain why they didn't raise this month, but it is really uh, yeah, driven by the uncertainty surrounding those LDP elections, I guess that they didn't really hike. On the J rates and which is the real estate investment trust and the ETFs, yes. And I'm not sure why it had to come as a shocker because that was already touted that they were thinking about that. But the funny line was that he said they didn't do it because they looked at the stock market value. I mean, really, if you want us to believe that with the Nikkei at all-time highs, yeah. But I think it came in a market which really was like a little bit with the eye flaps on and just going like, oh yeah, let's buy, buy, buy. It had a bit of an impact when they announced it. Nikkei dropped actually from the high more than 2%, but it's slowly, and when I look at the futures, we're slowly. We're still in negative, but slowly coming back. Um, it should have not really have come as a surprise, and the amounts that they're doing are absorbable by a market which would still be buoyant. So okay, the J rates are more going to impact the topics than the Nikkei, yeah? But the topics is a much smaller niche market than the Nikkei. I don't think that those amounts will really mean a lot unless we got a turnaround in the markets, etc., and then they're going to be a bit of an additional weight. But it's like you can compare it with the Norges Bank with their buying and selling Norwegian kroner, buying or selling Norwegian kroner every day during a month. It just adds to the fun sometimes. And but in a buoyant market, they won't stop anything, especially that they are going to 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 do it over such a long time, right?
Yeah, no, I think that's the thing. Yeah, we didn't, obviously they'd stopped buying ETFs and stuff ages and ages ago, and they'd always been promising that they would sell at some point. They've announced it. It was probably just a bit of a shock that they just announced it today. Market was
Mm.
waiting for it, but that 100-year thing, that is definitely we're going to do this, but there's no need for the market to panic because we're not going to be flooding the market with our selling. So yeah, I mean, I can't remember the amount, and I don't know what it means over 100 years per month,
330
that
million or
sort of
so.
thing. So
330
it's
million per month or so, which is
yeah,
Really, let's face it, it's not a big amount.
No, it's a small trade in the grand scheme of things. So yeah, slow and steady. Don't want to shock anyone or tip many apple carts over. UEDA was out after all that saying that the same old line, they're going to raise rates if the economic outlook is realised. He did touch on the leadership election, said they will respond to policy measures to be implemented by the new administration when the time comes, i.e. they're going to wait and see what happens. But a bit like many other central banks, they now see lower risk from the tariff and trade stuff. And he said it's not necessarily the case that we need to wait to see the full impact of US tariffs on inflation to make a decision on the data. So that's become less of an input. So yeah, this is probably another 2 small pigeon steps closer towards a hike, which we know is likely to come as long as the data holds up. I think if we get another round of real wages in the positive next month, so it's not just a one-off this month, then I think we're probably live for one of the next couple of meetings for when we get that hike. So yeah, be ready. But again, as we've seen today, it doesn't mean the yen pairs are going to fall out of bed and suddenly collapse unless they indicate they're on a mini hike cycle, taking rates up to 2% or something. But that's very doubtful. But we shall wait and see. Right, moving on from them. Well, there was a bit more in the statement, but it's nothing that we know otherwise. New Zealand are going to make a decision on their new governor because they haven't had one for a while. That's expected in the coming weeks. The interim governor, Dovesby, is seeking a permanent role. So he's looking to try and stay in the job that he's currently in at the moment. I hope they keep him because we like calling him Dovesby. There's been more bad news on the data front, though. Trade balance data coming in, dropping massively further into deficit, down nearly, 1.2 billion over there, as you can see that bit there. Imports continue to be afloat, but it's exports that drop back, hence that worse trade balance. So not looking good on the trade front as well. I'm keeping an eye on the time, Kay, because I know you've got to hop at some point.
I know. In 5 minutes or so, I need to hop.
Yeah. So let me whiz through all the other headlines. UK had some retail sales, as I've been expecting. August numbers good as well, better than expected. Month on month coming in 0.5, year on year up 0.7, so that was all good. Price pressures easing still in Germany. PPI coming in much worse than expected, down 0.5% on the month, down 2.2 on the year. We also had, I missed it, public sector numbers from the UK as well, and a bigger jump in borrowing than expected. And the borrowing for the financial year to August this year was 83.8 billion, 16.2 billion more than in the same 5-month period of 2024. So not looking good for Reeves. Those borrowing numbers for the month or period, the second highest since dinosaurs walked the earth. So not looking good for her. And the pound is reacting to that with a budget incoming. The Bundesbank, out with their latest crystal ball, said that German growth probably resume this quarter. They've been so glass half full. Really been kicked in the teeth, them lot. ECB Centeno, ECB cannot tolerate inflation under 2% for too long, expects 2028 inflation forecast to be below 2%, still sees inflation risks to the downside, one of the big hawks there. Bank of England, they kept rates unchanged 4%, MPC voted 7-2, as I expected. Dinger and Taylor voted for 25s. As I said, some were looking for an 8-1, with Dinger being the cutter, but as Taylor wanted a 50 last time, but only got 25, to reason that he would vote for 25 this month, and that he did. They also slowed their pace of QT to 70 billion from 100 billion. But even that was split, 7-2 on the vote. And also within that, Peel wanted to keep it unchanged, and Mann wanted to slow the pace to 62 billion. They kept their line in the statement: a gradual and careful approach to the further withdrawal monetary policy restraint remains appropriate. Bailey later on said rate cuts need to be made gradually and carefully, but that the timing and scale of rate cuts is more uncertain than before August. That's had everyone drawing down their rate expectation forecasts. Markets now see only 45 pips of cuts by the end of next year, so less than 2 cuts between now and the end of next year. JP Morgan, they now see 25 pip cuts Feb and May from Nov and Feb. Morgan Stanley and UBS don't see any cuts the rest of the year. Bank of America, no cuts this year, 2 cuts Feb and April. Goldies now see the first cut coming in Feb versus November this year, and then expect quarterly cuts to a terminal rate of 3% by the end of the year. Anything you wanted to know about the UK stuff? Now we're over that hump. The pound seems a bit more scared of what's coming from Reeves.
Yeah. That borrowing number is it's not good if ahead of the budget. And we were saying that, right? The summer goes by, and then probably the market will start to look at Reeves again. And I think this potentially gave the kickstart for this close monitoring what she's going to come up with, even if it's still like 2 months away. That is not a good number. We've seen a bit of what was not surprising for us because we are long euro sterling, but a bit somewhere surprising for the market is that a lot of expectations for rate cuts are being scaled back, but yet sterling was not doing well post BOE already. And I think this morning that public sector net borrowing number is going to keep the pressure on the sterling for a while.
Yeah, absolutely. And those good retail sales, as I'm expecting them to fall off a cliff next month, and then the worm will start turning.
Yeah, you said so already, right? That it's gonna you expect it to turn. Yeah. Okay, guys, I need to hop. Have a good show, Ryan. Have a good weekend, everybody.
Yeah, thanks, mate. Thanks for all your stuff this week, as always. Have a good drive around, dad's cabs or husband's cabs. And speak to you later. Cheers, mate. Right, moving on to here. The meter's on, as it's his wife, Gav. Yeah, good luck getting some money out of it. Right, moving on. We had some data yesterday. Initial jobless claims, that was a bit of a watch after last week's shenanigans with those naughty Texans putting in fraudulent claims. That's what kicked the number up. It's 264,000. So we're back where we should be, or where we have been, 231,000. Puts us right back in the middle. Continued claims as well. That dropped, came in lower than expected at 1.92, just a touch lower than prior, which was a upward revision anyway. So everything's back to normal as far as that goes. A bit of a surprise in the Philly Fed manufacturing, though. The index jumping to 23.2 from a minus 0.3, and only 1.7 was expected. So a little bit of a boost, it seems, in Philly, in the manufacturing sector. Could be a one-off, could be something else, who knows. But some of the other details, not so good. CapEx more than halving to 12.5. Employment just ticking down a bit as well, 5.6. Prices paid dropped a big 20 points to 46.8. Prices received nearly halved to 18.8 from 36.1. So amongst those numbers, there has been a big drop in price pressures, which is good news for the Fed. But we'll wait and see whether this is just a one-off. It's just a regional number, but you piece them all together, like the Empire, this one, the Dallas, the Texas, the Richmond, all these little ones, before we get the main numbers. Just gives you a bit of an idea which way the wind's blowing. But anyway, surprise gain there in that number. White House's Hassett says a Fed cut is in the right direction of much lower rates. Over to trade stuff. Mexico and Canada have been talking, and they have committed to having close coordination between those two when they enter the USMCA review. So it seems like Sheinbaum and Carney are maybe going to present a united front when they go and have this USMCA review. So it's going to be 2 against 1 rather than every man for himself. So that's all kicking up. If you're trading the MEX, if you're trading Canadian dollar, you need to be wary of what's coming from that. US House Speaker Johnson says we're confident we have enough votes for a stopgap funding bill to pass today. That's happening, likely to be a can kick. I think I'll talk about 7 weeks. So just keep an eye on those headlines in case the vote fails. The market will probably pay more attention to that than if it passes. Trump has been talking about Putin and how he's let him down and he's disappointed. And so yesterday we were chatting in the room about what might come next. Will Trump feel the need to come in a bit more stronger? He's given deadlines, they've passed. Putin's done nothing except waffle on. So Trump's in a bit of a credibility spot with this one. He said, though, that Putin will have no choice but to end the war if the oil price drops. So that looks to be his angle from now, not anything more serious. He thinks that getting the price of oil down, no one buying Russian oil, is going to do the job. Doubtful, but we'll wait and see. But there is still a little bit of a risk. As I said, we've had all the rhetoric a few weeks ago. We've passed deadlines. Nothing's happened. Trump's put his neck out there as the man to solve this. Will he start talking a bit stronger? Who knows? Let's see. What we have got to look out for is another Trump-Xi phone call to take place today at 9 o'clock ET. That's 2 o'clock here in London or UK. So they're going to have a whole waffle on, and we'll wait to see what headlines we get from that. Hopefully something more than talking about epoxy TikTok, which has been what they've been talking about recently. Right, that's it on the news front. I won't ask Kay if he's got anything else because he's buggered off. Not a lot out today. Nothing from the US. We do have Canada retail sales from way back in July, and they'll also try and guess the August number as well. So that's all we're getting from that. We know that the Bank of Canada's already cut, so this will just add to whether they may cut again or not. Apart from that, that's it. We do have a couple of Fed speakers. We do have Miran speaking later on, his first appearance after being put in the hot seat at the Fed. So that could be interesting or not. We'll hear whether he's pissed off about being out on a limb in terms of calling for a 50 basis point cut with no one else joining in. Right, let's have a look at what's going on. Well, I'm going to start in dollar CAD because that's really got some interesting price action going on here. We've had over the FOMC another hold at this zone. Now this was a trade I was looking at. I spoke about it with Mike on the trade-off. This was my play of the day to perhaps buy a dip down there, but we were up here when I made that decision. There was no way I was trading this 10 minutes before the Fed when we were sitting on that level, because it really could have gone either way. We could have been down here at 136s again, let alone back at 138s. So the main gist for me as a trader is that the level held by fair means or foul. The level held, it just confirms the level as something solid that we can rely on. Now, what's interesting is that we've had a third test and hold down here, similar to what we got down here when we were forming this bottoming pattern, okay? So although we had the steps up, which is far stronger than this sort of pattern, which is a hold at the same level, this one tells you buyers won't even let it get down to the prior levels. Okay, so this was a more stronger. This is similar. We've had 3 points, 3 solid holds. this has got every chance now of rallying higher, rallying up through 139, going for a move back up to 140 because of this price action here. Obviously, it's got to get through this level here, 138.60-70, where it's tried and couldn't manage to stay there for too long. So I think if we get a move above here another time, then we're probably moving on to that 140. But nothing's ever certain in trading. On the flip side, we could see something like this happening. If I get the right line, that one, where the price is going to not make it quite as high, and that comes in, look at that, pretty much on that line. So if we see something like this happening and it comes quickly back down to here, there's a very good chance that we're going to see a bit of a break. Now, it doesn't mean we're going to go all the way down here. We might just come down to something like these levels or this level, and then we bounce again. But we could maybe turn this in from looking very bullish to something that just looks a bit short-term bearish, something like that. Okay, but on balance, I think there's a greater chance that we go up than come all the way down and break this level. So I'm going to be back looking at maybe getting into longs again on this one. If I see a dip, I don't know, I may even take a break if we bust up through this 138.60-70 area. But this level, solid as it gets. This is why I've had it on my charts for so long, and that's something you can lean against again. But be careful if we fail anywhere between here and there and come down pretty quickly, because that might be a bit dodgy for the level down there. Euro sterling, and you know, both me and Kay are in this trade. This is something we're trading for the latter part of the year, okay, not the now. We know the data's been pretty good, PMIs, retail sales, even inflation has been sticky. It's come down a little bit, but it's been sticky. The jobs market isn't falling off a cliff. Obviously, we've had those borrowing numbers today, which has done some damage, but otherwise, you know, the data right now has been not too bad. So that's why the pound has been rather supported, be it with cable, be it the other pairs, be it even here, where we've just been sitting below this 87 area, trading between 86 and 87. Now we're over the Bank of England. Now we've had those borrowing numbers. The budget is going to start coming into focus. What we're waiting for is that some of the latest OBR forecast, that's the Office of Bodged Responsibility, sort of the independent number crunchers for what the government does. They're going to be announcing soon what they think the latest picture is for the UK, i.e. how much in the shit Rachel Reeves is in, meaning how much you'll have to raise taxes, cut spending at the next budget. So we're in the zone now, creeping into the zone where UK fiscal matters are going to matter for the pound. Hence why me and Kay have been sitting in these trades for a while in short quids, not for now, but for the later. So anyway, we've had a little break up about above this 87 area. This is a very key level, and I'll show you why. We take it all the way back. Zoom in a bit. This is a big old level. Okay, we've had it as resistance many times before. Going back. When we're above it, we make hay and we do things. When we're below it, the opposite is true. We come down. Okay, so this is a bit of a gateway level. It's a gateway if you're coming down as to where the price goes below. It's also a gateway of how far up this can go. Okay, one number, one level. And we've been around here early this year. Had little pokes above, couldn't hold it, couldn't hold it, couldn't hold it, couldn't hold it. So you can see how big a level this is. Even going back to here, late 2023. It was resistance. Here we got above for a couple of weeks. Again, we couldn't hold it. And then when you don't hold it, bang, resistance, and then we're all the way down here. So this is a monster of a level. If we get a decent hold above here, and I'm not talking about, you know, half a day, if we start to see it hold, and if we start to see the UK data turning, then this could be the one that runs I don't know, maybe up to the 90s again. It's possible. And depending how shitty things get in the UK, we may even do more. Now, obviously, two sides to a currency, and what happens in the euro is going to be very important. But this one could be playing out, and I'd like it going into the latter part of the year if we're above this 87.20 area. And if I see that, if I see it start to hold a support, and I'm talking, decent, even like this, decent holds, then I'm going to be adding to my position if I don't get any dips back to 86 or more to add to that position as well. So this is one for the next few months ahead. If you're not in anything, doesn't mean you can miss out. You either buy a decent dip or you look to trade the break at this level. But this 87.20 level is the humdinger for this one. Right, let's jump on to another pair, cable. And it's gone back to looking the worst of the bunch again. We've had a proper old breakdown in this one, more so than what we're seeing in the euro, and I'll look at that in a moment. So we crunched back under this resistance up in the 35.90s, 36. We had this all the way through the summer, couldn't get through there 3 times. Then we broke it, then we held it, came back, tested, held, bounced back to resistance, and then this one's been the cruncher. And then we've just gone on and crunched all the levels underneath. So this one, it's really, throw the dice as to where this one's going to stop. The thing about cable, you can look around the half figures and big figures. That's where you tend to see a lot of price action happening. So the next level's down here, 134, 40, 50. Had price action, support and resistance around there before. 134 is probably a bit bigger, and we did have a move under there in the early part of September, amid all that shenanigans, but it got back above there quickly. But if we're coming down here again, then if it doesn't hold, we could be heading all the way back to 133s, maybe even more. I think that, depending again on what happens in the UK, that's a high risk. Just on the dollar side of things, I'm not so sure whether the dollar alone is going to take us all the way down here. I can see a bit more coming out of this dollar strength that we've seen since the FOMC, but then we're probably going to find a bit of consolidation until we get the next big bit of data that tells us whether the Fed were right or wrong with their decision. The euro, that's making an absolute fist of this 1750 level. We've just had another test here. The first test looked okay. We got a bounce up towards 118. We couldn't tap the 118 figure, so it does look a bit of a weak nut bounce. We're back down at this 117.50. We've just had another test that's held, but watch the bounces in this one. If we can't even get back to 117.80, we're going through this, and then we're probably going to be 117 pretty quickly thereafter. That, I think, might be enough of a stretch point for this retracement, 117, 116.80s. Because if we're going through there, then we're going back into all this noise. Maybe down to 116s, this 115.72. But it's difficult because we've been in such a good trend. Look at the daily. This trend of the year, this is just a minor pullback. I mean, I'm not even bothered putting fibs on this yet. So the trend for the year is still very strong, still very valid. But in the short term, can we see a bit of a pullback? Yeah, absolutely. But as I say, anywhere down to, 116, something like that, it'll be a stretch to see 115s. And if I saw 115s, depending on why we're there, that'll be somewhere that I'd look to pick it up. And what candle brand? A Morning Star candle. Is that something you got in your table that you wake up with? No idea. Morning Star candles. Aussie Kiwi. This one, I did take a last short in this one. I was umming and ahhing whether just to fold it up because it wasn't going right. I took a short up here at, where did I get in? 77, I think it was. 76, 112.76. I have had a little nibble off in the dip down here just to put some in the bank. I've been doing that in all the short pieces I've been adding on, just putting on size, cutting a little bit, putting the rest in the bottom drawer. And I've done a little bit here. If I see a move down to 112 or below, I'll cut off a little bit more, and then the rest will go in the drawer with the other shorts. But I have tightened my stop up to just above 113, and that's it. I'll be done. I'm not going to fight that trend anymore if 113 is breaking. Let's have a look at some of the other bits and bobs. Let's have a look at gold. So, as you know, I'm fond of doing. This is all about where the levels are turning up, what's going to be valid, what's going to be not. A lot of these levels I put on the other day just to see what's going on here. Now, it's not, this is all very short term, okay? So it's not clear, but when you do this exercise, you just get to see what levels are maybe going to be the ones that are going to be important and what ones are not going to be important. And the ones that are not going to be important, you can take them off your chart. So from all this, I've got now 3 levels. I'm going to highlight them. What color? Let's make them white. Okay, so I've got 3 levels that I think are probably going to be the most important ones moving forward. And this is still, though, in the short term. I'm not looking, you know, to say trade this one and hold on for it for 6 months. I'm just saying when you do this chart work, you know, I could say, well, perhaps this is a level here that we're seeing right in there, purely because we're seeing a bit of support there, bit of noise, bit of resistance, bit of resistance. So that's what I do with these sort of things. I just build the picture up as the price action develops. But from that, you might have 6, 7 levels. But from that, you can start to see which ones are the more important ones. This one's more important because when we had the move up and we had a little pullback, this is where it held. This is where it held. We had a little nudge under, but it got back above quickly. Then we had a bit more messy price action, but then it held, it held, it held, it held. Then it held, then it held. Then it's sort of held there. So you've got all these touch points. Okay, that's what makes this one potentially a better level than some of the others. This 3640, it's a bit noisy. Resistance, support, support, resistance, support, 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 messy, resistance. Okay, but it's done a lot of waffling around it. So this one is maybe not a level you trade, but it's a level that you could maybe take profit against, or it's a level that becomes a bit of a pivot. Okay, and it might develop into something more. But what you want is these nice, clean price action moves. The same up here, 136.74, whatever you want to call it. Okay, or this one in the middle, 136.57.58. Again, pretty clean in terms of when the price reacts around it. Okay, a little bit of messy in here, but here we are again, and we're having resistance against it. So actually, I made that the wrong one. That's not the level I want. It's this one I want. Here we go. So these 3 are the most important levels at the moment for me. This one, because it's the top, it's right on a big figure. So we had a little bit of volatility over it, but this is a big psychological level, 3,700, a big round number. So we've had a few tests, one break, but a failure. So this one could be, if we get another test now after all this time, a few days today, and it holds, then that's going to say, yeah, this is something I need to pay attention to and something that I would be prepared to trade. Okay, so in the moment, here's your range, 136.20s, 26, 137. If we're moving either side of that, that's likely the next direction that we're taking that's going to be worth more than a couple of bucks, potentially. Okay, so you can long into it, short on a break, put your stop just above it, or long into it, put your stop just below it. Okay, these give you your low risk levels to trade, and you just build this picture up as it goes. And if you need to take a line off because it's not working, let's say this one doesn't work, take it off. Then your picture becomes clearer. So for gold, which way is it going from here? It's still maintaining its bullish stance. So, you know, the upside is still more favorable over the downside, but that will only be determined by what levels we break. And if we can't go and make new highs, well, then there's only one other thing it can do: come back down to here and then maybe go a bit lower. And you can apply this to the S&P as well, because that's, you know, doing the same thing. I haven't been doing the tech work on this too much of yet, because it's still a bit noisy. But we can probably just chuck something in there, and we'll just chuck something up there. Okay, this is to be decided, because we haven't had enough price action at these levels yet to determine what's going on. There we go. To determine whether it's a worthwhile level or not. This is just a bit messy in here, but it's trying to do something against it. We know that's a top at the moment because that's where the market stopped. So that's your marker. And then we've got a couple of levels below, a couple of levels below, so on and so forth. But I've not done this one as much as I have with gold. Right, if you've got anything you want me to talk about, now's the time, because it's a Friday, so get your knock-ins in now. I will have a quick look at US yields, because they've had a bit of a decent rally. We've pushed away from that 4% mark, got above this sort of midpoint, 408s, 409s. We have run into trouble up here. There's every chance that we go for a look at 420. I think we're probably setting up for a bit of a range move between 420 and 4%, a bit like what we got 420, 450. Okay, the market knows rates are coming down, as slow as that may be. Where we go in yields now is dependent on what happens in the next items of data. Get another wonky NFP, market thinks, okay, they're going to do more than one cut next year, then we're going to see yields coming down and that are coming down. If it's bearish enough and we break 410, then that 4%, that's going to tell you the market is going to be selling more dollars on the back of that. So as I said, over the Fed, your 10-year yields are your indicator for how far a dollar move may go, depending on the news. If it's bad news for the US, but yields don't break this 4% mark and you're in dollar shorts, then you've got to be wary of that. Okay, don't be thinking, yes, dollar's going to fall out of bed on that bad news if yields can't get below that 4% mark. It's going to put the brakes on. Another one was not much to talk about in this one, dollar MEX. We're sitting bang in the middle of this zone. These are your two key levels down into this fib and this prior level, 61.8 and this 1850. We're bang in the middle. Again, these are just little levels that I've put in just to see where the price might do something in the middle. Not stuff I'm that interested in trading, but it tells me, you know, which side we're likely to see a move. At the moment, because we're hitting our head around this 1839, that tells me that we've got every chance of having another look down here. But conversely, we've had two tests down here that have bounced pretty solidly after. Okay, one was volatility event driven, the other one a bit more solid. Tells me that there's something definitely going on down here. And we do the same thing like we did at the 1850. Okay, this level down here might develop into something as strong as this. And then you got 3 months to trade it. Okay, but we don't know until we see what happens. So if we go 1850 and hold it, I'll probably add it back to my short position. I'm still core short, but I'll add back a bit more if we hold here, because that technically will be a big signal that we're not done going lower. And then we see what happens in that range. Right, if you guys and girls haven't got anything else to talk about, did I look at dollar yen? Can't remember. Quick look at dollar yen. Not really much to say. We're back in the box, back in the range. We are finding a bit of resistance again, 148s. We need to get above there before we even think about having a look at the top of this range. We got to 148.11 this morning. Now we're pulling back to 86.87. No data later, so I'm not sure what this one does. Maybe the market says, thank you very much, we've had enough this week. We're not going to do a lot for the rest of the day. But it's been a solid bounce, and that was a solid bounce last night after the Bank of Japan and all that noise. So again, it just tells you which way the market wants to lean in this one for the moment, and that's further yen weakness. And now we're past the BOJ. Eyes are going to be on that election coming up. Right, that's it. I'm leaving it there. I've had enough. I'm sure you guys have had enough. It's been a long week. I hope you've had a good week. And I hope the things we've been telling you here have helped you along the way as well. If they have, please let us know. If they haven't, let us know as well. If you didn't understand anything, or you missed something, or something went wrong for you that you weren't sure about, then ask the question. That's what we're here for. Other than that, have a wonderful weekend. Enjoy the rest of your day. Take care. Be safe. Drink lots of beer. We'll see you on Monday.